Dustin, it's good to see you. Today we're talking about long-term care insurance. 3 things to consider before you buy a policy. I was surprised to learn that more than 70% of adults who live to 65 will need long-term care. Not only is it very expensive, but also it's not covered by Medicare nor other health insurance plans. Who needs long-term care insurance?
Yeah, well, like you mentioned, almost 70% of us will probably need care at some point during our lives. But most of us want to believe that we're going to fall into that 30% category that
Right.
don't. In fact, when I have these discussions with clients, often I get some kind of silly and morbid answers. I'll have people tell me, well, I'm just going to have my family put me down like a horse with a broken leg. And I'm getting these answers sometimes from people that have had parents or grandparents either had a long-term care event or having one while we're having this discussion.
Hmm.
So I understand that often it's just an inclination to want to avoid that conversation. And
Right.
I understand because these long-term care events and coverage for long-term care can seem so expensive that it just seems like an insurmountable problem.
Right.
Doesn't have to be. Actually, there are some other ways often that are easier and more cost effective to get some level of protection. But everybody needs to do some planning for long-term care. If you're not doing some planning for long-term care, unfortunately, you just don't have a financial plan.
Right. Well said. So now let's talk through those 3 considerations before anybody buys a policy. The first question, I hear this one all the time, right? What is the right age to buy and what qualifying factors do we need to know about?
Yeah. So for most people, the sweet spot's going to be sometime in their 50s to their early 60s.
Okay.
That's the point in most people's lives where they're in their peak earning years. Maybe the support of their children. They're not having to support children anymore or support them to such a large extent. And they're able to maybe afford some of those premiums before those premiums start to really get cost prohibitive. One of the problems, however, with purchasing that coverage in your 50s or 60s, that's also the point in a lot of our lives where we start to have some new health challenges. So, we don't know if we'd even be able to qualify for that coverage, or if we'd be able to qualify for it with attractive rates if we happen to have some new health issues.
Hmm. Okay. It's an important consideration. All right. The next thing that we're going to talk about is simply the expense of it all. And I want to show you this, Dustin. I know this is not new to you, but again, it was really eye-opening for me. As we take a look at cost of care by state, this is in the San Antonio area. Monthly median cost, this is projected out to 2031. Anywhere from $4,500 to $9,000. I mean, that can wipe out your retirement savings. But on the other hand, I think a lot of people feel like, well, am I going to pay in all this money for this many years if it's use it or lose it, right? How do we balance that?
Yeah, this comes as to no surprise for anyone who's had someone in their family
Yeah.
need long-term care. It's very expensive. It continues to get more expensive. Just to address a couple of misconceptions really quickly, Medicare does not pay for long-term care. They pay for skilled nursing. They'll pay for skilled nursing, I believe, for up to 100 days. Pay for someone to uh, uh, recuperate from an illness or an injury in a
Right.
facility, for example, as long as they continue to get better. If at any point, let's say somebody had a fall and, Medicare pays for some of that skilled nursing coverage for a period of time to recuperate. If at any point, it turns into a permanent condition, they stop paying.
Wow.
Um, Likewise, a lot of people just assume that Medicaid will pay. Well, Medicaid won't pay anything for long-term care until you spend down your assets to such a point that you and your spouse are basically indigent.
Right.
So a lot of people may tell me that they don't really care what happens to them once they have a long-term care event, but they should care what happens to their spouse
Of
and
course.
their kids.
Right.
Somebody can have a great plan for retirement. They can have a great plan put together to leave a legacy to their children. And if they have a long-term care event that forces them to spend their assets down to very little, now that retirement plan is blown for their spouse, and the legacy for the kids is gone.
Right. Ugh.
Um, so, um, Yeah, very
So difficult.
expensive. Need to do some planning for sure.
You can see why people don't want to have these conversations, though. It's very difficult, especially, I mean, I'm so grateful we can just talk it through, Dustin. Of course, though, instead of long-term care insurance, there are a few other options. So what would you recommend to somebody who's not going to buy long-term care insurance?
Yeah, long-term care insurance may be the right answer for some people. One of the problems, however, you mentioned it before, some people are hesitant to buy a product where they're going to pay thousands of dollars in premiums every year for the rest of their life
Right.
and hope that they don't use it.
Right.
Okay. So there could be a huge opportunity cost to your retirement plan and your estate by purchasing that insurance. And again, if we're purchasing it later in life, we don't know what our insurability is going to be like at that point. So
Mhm.
there are a few things we'd look at that might make sense as alternatives or part of your plan. One of them would be life insurance with living benefits.
Okay.
Okay. Special type of life insurance becoming more and more common where I love this. It's an opportunity where we can take $1 and make that dollar do 2 or 3 different things. So life insurance with living benefits pays a death benefit just like any other policy. If you die too soon, okay, so there's a tax-free death benefit to protect your family. But if you had a critical illness like heart attack, stroke, renal failure, you need organ transplant, that insurance company will allow you, they will pay out a substantial portion of the death benefit that otherwise would have been paid out when you die. They'll
Mhm.
pay it out while you're alive, so you have some money to pay for your care.
Hmm.
Same thing with a more permanent condition, a chronic illness, what we would call a long-term care event. They'll pay out a substantial portion, almost all of the death benefit in many cases. They'll pay it out over a number of years while you're alive so that you and your family can pay for care. So if you die too soon, the policy covers and protects your family. If you get an illness or an injury like severe burns, and you don't have the money for the medical care, you can get some of that death benefit paid out early. And if you have a chronic illness like a long-term care event, you can get some coverage advanced to you to pay for that care while you're still living.
Interesting. Now, another option that you wanted to bring up, hybrid life insurance. What is that?
Yeah, so hybrid life insurance is going to look more like the benefit it would pay out in the event of a long-term care event. It's going to look more like your traditional long-term care policy would pay, for example, a monthly benefit and a hybrid policy as opposed to a policy with living benefits. Dollar for dollar, generally it may get you more coverage for a long-term care event. There's one other thing I wanted to point out with regard to using life insurance or a hybrid life insurance product for coverage. This is some coverage where you don't have to wait until your 50s or 60s to start layering in this protection. You can, with something as simple as term life insurance, you can start buying that protection and layering it into your plan as early as your 20s, 30s, and 40s.
Hmm.
I'll give you a perfect example. I got a client right now, unfortunately, late last year, at the age of 50, she had a stroke. She's wheelchair
Mm.
bound right now. Fortunately, we had some term life insurance coverage on her that had those living benefits. So we're in the process of making a claim right now, and we expect a substantial portion of that her $500,000 death benefit to be advanced to her and her family to help pay for some of her care and medical bills. And she was only paying less than $100 a month for that coverage.
Right. Oof.
Okay.
That's so
Um,
nice. So what a big help to her family too, right?
Absolutely, absolutely, and that's something that can start being built into your plan very cost effectively with something as simple as term life insurance, and that gives you the option as you get older and as your earnings go up to consider converting some of that term insurance into a permanent policy that would cover you for the rest of your life, both with with the choice of a death benefit or coverage for something like a long-term care event.
Mhm. Okay. And then another option we wanted to walk through, hybrid annuities.
Yeah. So if you're not in a position where you feel like you can pay premiums, but you've got some assets, you can use an asset to provide that coverage. So there are annuities out there, for example, where you purchase that annuity is going to grow and earn interest. But if you're in a situation where you needed long-term care, there are some cases where those annuities will pay out a benefit equal to 2 to 3 times what you paid for that annuity.
Hmm.
Okay. Subject to qualifying for it.
Right.
Yeah.
Interesting. Dustin, thanks for breaking this down because, again, it seems like one of those things that we'd rather not talk about, but it's such an important conversation to have. And as you mentioned, it's such an important part of a holistic financial plan. It's just so important.
Absolutely.
Yeah. So if somebody has questions about anything we've covered today, what's the best way to reach you?
They give me a call or a text at 830-476-2505, or they can reach out on the website to book a free chat, longlivemymoney.com.
All right. Dustin, thank you.
Thanks, Erin.